At the super microcomputer stock, there was a gamma squeeze related to options. We can observe this according to the volatility smile, as well as the volatility on nearby strikes. These strikes tell us everything and where the price of these stocks will move further. What can I say first? Perhaps fundamentally these stocks are growing, but this growth is not related to the fundamental valuation of the company. This growth is solely related to the increase in trading volume, and not even of the stock itself, but specifically of the options. We can look at how much the volume has increased. What it was before and now, in some strikes, the volume reaches up to 10,000 contracts. This is a very serious volume. Therefore, a gamma squeeze has occurred. Yes, it's not even a short squeeze. I remind you, a short squeeze is when too many investors and traders start selling these stocks short, opening short positions on these stocks, and then the stock starts to rise and they have to stop at their stops. Closing these stocks and then the acceleration goes further. Gamma squeeze does it differently. Options from Greeks, delta, gamma, vega, gamma. This is the change in delta, therefore. When the stock starts to rise rapidly, the market maker needs to hedge the sold options. I remind you that all the sold options which traders sell to you are mostly sold by market makers, not some other market participants, although this also exists, namely market makers. And to hedge their position, they need to buy stocks. According to the delta, for example, if they sell you the 8030 strike, then their task is to buy 37 shares per one option, but if you roughly count it. And then after that, when the stock starts to rise rapidly, what happens? The delta also starts to rise rapidly. Therefore, they have to buy more and more stocks to remain in delta neutral positions. Therefore, the stocks start to rise very strongly, consequently. This we see all in options, my friends, who start drawing charts of where the stock will go. This is all nonsense. The most important thing is our options market at the moment. Yes, it may be strange, but in this historical epoch, markets are driven precisely by options. Therefore, we will look at them first. Let's look at the volatility. As we can see, there was a volatility spike. It was very high because of this large increase, and then there was a volatility spat. What can this say about the fact that the gamma squeeze is ending? Again, I cannot predict the price movement. I immediately say, I don't know where the stock will go, but according to this data, according to the options market, I can assume that the super microcomputer stock will not rise above this point. Why do I explain my logic that a gamma squeeze has occurred? Research shows that at the moment, option volatility is decreasing, therefore the cost of options is decreasing. Consequently, the gamma spike is fading. To continue it, another sharp push upwards is needed. If we look at the volatility smile, again, it is skewed towards puts, and very seriously. Look at the volatility even on the contract for March 15th. It's up to 254 for the week. Incredible. Also, we look at the traded strikes. On the put side, our most traded strike is at the $1,000 level. Someone is buying very heavily, but again, $1,000. Look at this. It's an impenetrable wall that the market maker will feel. Most likely, options were simply bought here, and the market maker sold them. Again, if we surpass the $1,000 level, then we may exclusively experience another gamma squeeze shooting sharply upwards. But again, according to options and exposure, I don't think we'll surpass this level. Again, by no means is this a recommendation or a call to action, but I've stayed away from this stock. If someone asks me how to profit from this stock, my answer would be to stay away from it. But if you still can't resist, if you want to do something, what would I advise? Open this situation exclusively through options. Here our task is to sell volatility. I would consider a date, say, for 40 days so as not to tie up too much capital. And what would I do? I've formulated a small strategy dedicated to this stock through options. Disclaimer, by no means should you follow my positions. You're advised, I'm not going to open it at all. This is solely for informational purposes. What would I do? Let's look at the inefficiency of this stock. As we see, the inefficiency at the end of the term cannot be minus due to the $120 event. That is, we orient everything on sharp movement. If a sharp movement occurs, and it doesn't matter to us whether it goes up or down, then we'll start. It's good to earn like this, but again, this strategy requires management because if we make more, if the stock is going to rise or fall very strongly, then at some point we will need to restructure this position without hesitation. Close puts, close calls. In general, such a position, if you want me to open it and manage this position, right, we'll think about how to do it. In summary, according to the options market, we're unlikely to surpass this level. But if we do, the gamma squeeze could continue very strongly. Again, I don't recommend anyone to get involved with this stock. Can it continue to rise? Maybe, but again, the risks here are too high. Also, at the moment, the stock is very popular, which of course does not bode well for it either. There are very large jumps happening. I also advise you to watch these videos about the super microcomputer stock, where I also explained in great detail why I anticipate the stock will fall.